Good afternoon, everyone. Jason here. Today is November 13th, and this is your aftermarket update. All right, so you can see here on this day we had a final P&L of $2,610 on the CL. It was a one trade and done, and I'm going to show you that trade here in just a couple of minutes. But what I thought I would do is go through the very specific reasons as to why we ended up in this trade today. And so before I do that, I just want to talk to you a little bit about our methodology of analyzing the markets. We sit down every morning and we talk about what is the story that the market is trying to tell us. The market is always painting a picture. It's our job to determine and come up with the ideas of what that story is, right? What is the story that the market is trying to tell us? Once we find out and determine what the story is, we got to find out where we are in that story. What is our structure? Where are we at in the current story? Once we get that, we have a couple of strategies that we look at. Then we have our tactics that we're going to execute entries on. And then once we are in a trade, we are all about managing the reward to risk ratio to get us to a point where we're at least getting a 2.5 to 1. This trade today had a 9-tick stop. You'll see that in the video here in just a couple of minutes. And we ended up with 87 ticks times 3 lots. So again, I'm not an all-in and scale-out type trader. I'm an all-in and all-out. And so we did all 3 lots today times 87 ticks with a 9-tick stop that ends up being just a bit over 9.5 to 1 reward to risk ratio. All right, so the very first thing that we do when we come in is we take a look at what the big picture idea is. So if you come back here to this is around the 5th of June, the market has been in this kind of sideways pattern up until we had the explosion at the Saudi oil fields, oil refineries, and then we had this sell-off where going back into, October 3rd, and then the market has been making this series of higher highs and higher lows in this channel formation up until recently where we have gone into this kind of sideways mode. The other thing to look at here is the green and white lines here represent the average daily range. And you'll notice that the market is trending to the downside in terms of average daily range. And to the point here where the 20, which is green, and the 10, which is white, are both kind of wound up together. So again, we are pretty much trending downward in our average daily ranges. The other thing to notice here too is over the course of the last 3 or 4 days, we have been volume has been lower than our 20-period SMA. So again, lower participation explains why we've had a difficult time breaking out of this 8-day kind of range that we've been in. So taking a look now at your profile to get some structure under our belts here, you can see here very clear on the profile that we have been range bound within anything above this area here ends up being a breakout to the top side, anything below here, and we talk about starting to challenge some of these value areas underneath. So we talk a lot about value versus price, and again, if you're trying to look at where value is, the market has just been rotating between value areas here for the last 8 days. What does that mean? That just simply means that the participants that are involved right now all believe that the value of oil, this particular instrument, is in that 8-day range. It will take some catalyst to change the perception of value, and we're going to have to wait and see what happens there. Also, this is an RTH session profile. These are the RTH sessions. Again, 1, 2, 3, 4, 5, 6, 7, 8 days that we've been bound inside of that range that I just showed you on that other profile chart. Now, that's the structure points. We start talking about strategies and what are we going to do and how are we going to execute and where are we going to be executing. Another profile chart here. Everything in gray represents the ETH session. Everything in white represents the regular trading hours. This is the overnight session, and this is the day session. So let's bring this back like this, and let's take a look at what happened here today. So settlement today was 56.80. That was the settlement from the previous day's session. And so as we were entering into this overnight session here, one of the things that we talk about is where does the market open in relationship to settlement. If you look here at settlement, a large percentage of the overnight volume, in fact, right here we opened at 56.50. We had been as low here all the way down in the overnight session as low as 20, and the vast majority, I would say about 98 to 99% of the volume had been spent in the overnight session below settlement. So we opened here and got down into the value area for the overnight session at that low at 31. The volume value area was 34. We come down through, can't quite get through the volume profile value area, and then we begin to look to rally. We're going to talk about this area. This is the area where we look to get long today, and I'm going to show you why that was. But one of the things that we know is that the market is range bound, right? And so we were getting closer to the bottom of that range in the overnight session. And so we were looking for the market, if it was going to come back into the value area from the overnight session, we were looking to take out settlement and then potentially higher. So this was the concept and idea that we were looking at here today. So one of the things that we talked about early in the session and that we just described here is, what is the story the market is trying to tell us? Well, the story is that the market was in these range-bound conditions, right? For the past 8 days, participation had been lower. The volume had been, the value areas had been in a pretty much a range-bound idea for the last 8 days. We said that if the market were to come back into this area, we would be looking to get long. You'll notice here that it could, at the low of 20, couldn't quite get into this zone. And then we were saying that we there was a probability for us to come back up into and test that settlement and maybe higher. And so that was the story. That was where we were in the story when we opened this morning. And then it was going to be our job to try to find our tactics to be able to enter into a position. And so as the market opens up, we came down here into one of our market makers support level areas called the DS signal, which is right here. One of the things that we also talk about in detail is that there is a 10-tick box, zone of influence, on either side of these levels. And so if you look here, that was the zone of influence right there. At 37 down to 27, the market comes in, dips itself down into here. It is on this bar where we look to get long. And again, what we started to notice here is, if you look at your heat map, this is that time of day. You'll notice that there's big liquidity underneath us here, right? So if we were to pull this back just a little bit, let me see if I can come back the other direction here. Yeah, I'm not going to be able to pull that back any further. Let me see if I can do it this way. Yeah, I'm not going to be able to pull that back any further. Anyway, let me do one thing. Let me see if I can spread this out just a little bit like that. All right, and we'll come back here into that time of day and see if I can hone in on that just a little bit more clearly for us here. So give me just a second here as we kind of roll through the heat map. I think it's important for you to see what we were looking at in real time here this morning. All right, so as the market opens up here, right here at this 50 area, where is 50? It's right here. All right, so as the market opens up at the 50 area, starts to sell off, and you have this big liquidity down here underneath you. This is right at the open. And so we had our market maker level idea. Let me move this out of the way. We had this market maker level idea right here from 37 to 27, right in this zone where all this liquidity was stacking up. And so we ended up getting in right at that point here on your market maker level, right at this bar here. And just again, we got confirmation here as the market began to come down into this heavy liquidity. My stop was actually 9 ticks. So I'm in at 35. I ended up getting in at 35. My stop was going to be 9 ticks to 26, just below this area of liquidity right here. I could have had it a little bit deeper, but again, I wanted to keep the risk pretty tight early in the morning. So we were using this as our support idea. You had your market maker level down here at 27. My stop was 1 tick below that level, and that is where we got in, and the market began to just rally all the way up to the point where we ended up with 87 ticks times 3 lots. So again, it was a very simple process today that was executed very well. And of course, the fifth component always is that reward to risk ratio. So again, what was the story the market was trying to tell us? Well, the story that we had determined that the market was trying to tell us today is that we were in these choppy conditions, had a slight bearish lean or bullish lean to it. Again, just coming back here one more time. Market was in choppy to sideways over the last 8 days with a slight bullish lean to the marketplace, right? And so that was the story. The market was trying to probe a little bit lower, but that the overall direction was sideways to bullish. That's the story. Where were we in the structure, in the story? What part of the story were we in? That's your structure. We opened up the market here. Let me move this back out of the way and grab this one here. We had opened up below settlement. The majority of the overnight session had been spent below settlement. We opened up at 50. We probed down to just below the value area of the volume profile. Market begins to rally back up. We knew that there was a good chance or a good opportunity for us to come back to the other side of value area because we are trading value, not price. And value has been making that, has been testing both ends of the value for the last 8 days. That's where we were in the story. The strategy is get long at the bottom and short at the top. That's your strategy. We found our location to get long, and we had confirmation we had the area of our market maker level. And then, of course, we had the heat map was telling us exactly and the order flow was telling us exactly that there was support in this area. And then the final piece of the puzzle was risk. We said we're going to take a small stop. If it stops us out, it's going to be 9 ticks. However, if we do get in and it does want to run in our direction, then we have an opportunity for a very good trade. And that was the anatomy of a $2,600 3 lots, 1 trade CL trade of the day. Now, what you'll also see here in just a minute is I'm going to break this video down into components. I'm going to show you the beginning. Then I'm going to show you some of the middle section. I'm going to speed the middle section up, put some music behind it, put a few graphics in there to kind of explain what we were doing. And then I'm going to show you the very end, and you'll be able to see exactly that this price ladder lines up with what you see at the end of the video. This trade was taken in front of a live audience here today. And again, it was 3 lots, 9 ticks risk, 87 tick reward, CL, 1 and done trade of the day. So as always, I want to say thank you for watching the videos here today. And as always, I want to wish you good luck and good trading. I'm in at 35 long. The stop here will be 29. It is going to be a very tight stop. Actually 26 on the stop, 9 ticks to 26 on the stop. In here at just inside of this zone of influence, we're going to be looking to try to rally into the 50s. And if it's really working out, then it's going to come all the way back to the DS signal on the other side. And we're going to try to make a play for that settlement